Hey guys, it's Willie. Today I want to take a look at Emerson Electric Company, currently trading at $93 even. Over the past 6 months, you're looking at down minus 4.76%. But a lot of that, comes in ups and downs and ups and downs and ups and downs and ups and downs and all over the place over the past 6 months. Emerson Electric, as far as I understand, is kind of like a GE, making consumer, commercial, industrial, electronic products. So yeah, a business you can wrap your head around. If GE makes light bulbs, I think we can, envision a business for light bulbs. It's pretty simple, straightforward. Emerson Electric is pretty much the same way. An easy business to wrap your head around. But, as always, we want to know as investors, is the current price somewhere where we would like to buy Emerson Electric? And to figure that out, we want to jump over to our handy-dandy spreadsheet to look at Emerson Electric, stock ticker EMR, $93 even. First, we want to look at revenue, net income, and free cash flow. The money coming into the business. Our revenue is coming down, unfortunately, over the past 10 years. Right here, I would be interested to see what happened here. Why did revenue fall so much and then net income didn't and free cash flow didn't? I don't know. That seems weird. These numbers did update in the spreadsheet, right? Yes, they did update. So yeah, I don't know. I would be interested to figure that one out. If anybody knows, comment that below. But revenue is falling. I would call it flat, really. I think you've seen it. Since here, it's flat. So not that concerning. But I think it's just this big fall right in here. Net income, good, growing at 1.5%. Free cash flow growing at about 2%. Shares. Thank you for buying back your shares and rewarding your investors. They're buying them back at minus 2% a year. I hope Emerson Electric continues to do this because it allows investors to own a larger share of the business, a larger share of the earnings, a larger share of the free cash flows, thus driving shareholder value. And it's more tax efficient than a dividend. Growing EPS at 3.63% and free cash flow per share at 4.35% per year. Pretty solid, stable growth on that one. Not going to really complain about that. Assets, here they are if you're interested. Mostly flat. $25 billion in assets. Dividend. Dividend is going up for Emerson Electric, going up slowly over time. But no cuts, no drops, no stopping of growth. It's just slow and steady wins the race in this case. So 0.35% growth of the dividend over the past 10 years. Good job. Really good signal of a stable business and management comfortable with paying a increasing dividend over time. Total debt, here it is. Flat, just like assets. Cash, flat, just like assets and debt. So you get your net debt is flat. I don't think it's crazy high. It's there. If you're more interested in these numbers, I would really be interested in what happened here. Why jump, fall? I don't know. ROIC, really good. 14.5% over the past 10 years. Good job, guys. Good job at having a really solid ROIC. On to our metrics. Our PEs are telling us it's a little expensive. Price to free cash flow looking cheap. 5-year price to free cash flow looking expensive. 5-year net debt to 5-year free cash flow. You're looking at 5.3. That's close enough to 5. I can give that a pass. Revenue growth, good. Earnings growth, good. Free cash flow growth, good. Shares outstanding coming down, good. ROIC, good. On to our forecasting now. I said 2% growth for the net income and free cash flow, as well as a 15 multiple for both price to free cash flow and the price to earnings multiple. So based on free cash flow, you're looking at, call that $91. Net income, you're looking at about $70 in 10 years. Right now, it's trading at $93. We average our two prices together. You're getting about $80.44 in 10 years as a price target. So if you were to buy at $93, you get these free cash flows. You'd be out at $80.44. That is a 6% rate of return over a 10-year period, annualized. That's 6% every single year. So that is below market. That's not what we are looking for as value investors. However, I think Emerson Electric does not have to fall very far for it to be a good price. And as we saw in our price chart earlier, it's pretty volatile. So let's see, what's a recent price here? $89.51 at the 1st of March. That was not even 2 weeks ago. $90 there. Back December 1st, it was $86.79. So if we put in $85, you're looking at 7%. So I mean, over the past 6 months, you've seen a lot of volatility, and it wasn't, too long ago that was COVID. That's a whole nother thing, I guess. But the volatility is there, so it doesn't have to fall too crazy far. What does it need to fall to? 70? What does 70 give us? 70 gives us a market return. That's not crazy far for Emerson to fall. I think you're looking at a solid company. And if you look at more aggressive growth rates, that would bring you up a bit more. But I think that at the current price of $93, you're looking at a lower return. Again, like a lot of the other companies I've looked at recently, it's a good watch list company. Add it on there, wait for it to fall, buy it once it gets down to the level you want it at. But for now, I would just kind of sit on it and just wait. If you're in it, I would stay in it. I wouldn't get out. I would just stay in. If you bought it at $90, I would just stay. I think you're in a good company. I think you're gonna, there's a higher likelihood of you making a mistake by switching than just staying in the company. So just, if you're in it, stay in it. If you're not in it, just wait till later for a better buying opportunity. But beyond that, that's really all I have to say. Comment below any sort of suggestions for stocks that you would want me to look at, or constructive criticisms about the videos. Any way I can make these better, I want to try to make them better. So any comments on that would be appreciated. Like, comment, subscribe, all that crap for the algorithm. Thanks for watching, and I will catch you guys in the next one.